Guys, my name's Alex. I'm here to talk to you guys a little bit about private lending and what kind of private lending opportunities are available here at Pal Property Solutions. So, for those of you guys who don't know, we often do purchase dilapidated properties here. On our site, you guys can check out some of our projects where we've bought properties that are in really, really rough shape. So, in order to sometimes close on these deals, some of these can't be mortgaged. Banks will look at them and be like, no way are we lending on a property that's in that condition. And that's okay with us because we know that this property, once it's being fixed up, once it's being brought back to life, we can then put it back into the circulation of housing, and some family or somebody can buy this property and then they can live in it and feel comfortable that it's being done right. And at that time, once the renovations are done, that bank will now lend on that asset. So, however, when we buy these properties, sometimes if we're strapped, we don't have any way of getting an A type loan on it, which is often, we have to resort to private lending. So, private lending also comes into play when we are dealing with renovation costs. For example, we might be able to secure an asset. Maybe we can get a loan on it. Maybe, we're still using private on that purchase as well. However, we still have to renovate the place, right? So I'll give you an example of what a typical return is on a private loan. So let's say we have a property, we've bought it, but I go and say, listen, we need $100,000 that towards this property that we're going to be renovating it. And I know that by us borrowing that $100,000, even at the interest rates that will be provided, we'll be able to sell this property and we'll make a great profit. And you guys, as the private lenders, will still have consistent income monthly. Okay, so let's say that the renovation costs on this property are going to be $100,000. Okay, our private lending interest rates are anywhere from 8 to 12%. It really depends on the opportunity, depends on a lot of different factors that come into play. And this is typically done on a promissory type note basis. Okay, so if a property is secured on an asset, which can be also private lending, then the interest rates are typically lower in those situations because there's more security. You guys have, that backing that should something happen, should a default take place, the asset is still going to default to you, which is a great thing. That's the security that you guys need. However, we also have a large asset base. We have a lot of properties that we own, and we have never defaulted on a payment ever. So, that being said, even on promissory note basis, where we are guaranteeing that we are going to be fulfilling our obligations of repaying our lenders, we have a lot of assets that we would never want to risk have being taken away from us. So we make sure that we don't get into high risk type deals. And so then our lenders are incredibly happy. We're incredibly happy because we make it all happen. So here's an example on $100,000. Let's just go on the lower side for right now. That on $100,000 at 8% for the year at 8%, that would be $8,000 of income per year. Okay, so if we break that down monthly, just pulling out a calculator here, that is $666 per month. Now, if you consider that, if you consider some of the cash flows that properties are getting nowadays, you might say to yourself, I'm okay with not necessarily having equity right now. Maybe I have enough equity that I'm happy with. Maybe I just have a spare $100,000 and I'm not really sure where to put it yet. I'm looking for something maybe short term that I can just turn over in the next 6, 8, 10 months, whatever the case may be, next year. This might be a very good solution for you just to have a little bit of extra money come into your account. Because we all know that right now our savings account are not performing as well as we would love them to. So don't have your money in the bank. Give us a call. Tell us what or ask us what opportunities are available, because if you can get a little bit of extra interest rate, you can start to compound that. You can start to build your wealth by doing that. Because $100,000, now it's $108,000 after a year. Right? At 8% again, it compounds itself. So we want to always keep our cash moving. And if you find great companies and great individuals like us who will treat your money with as much respect as we would treat our own. These are very, very important relationships to us, which we don't ever want to take lightly. These are great opportunities for you guys to make some really great monthly cash flow. Give us a call.